Financial Planner. Follow us on YouTube.
The central banks move their plan forward. Be prepared and cautious. Let's get into the economic collapse financial news. Now, we have been watching the crypto market, and we've been talking about it. I had the interview with Jeff Nielsen. I discussed it in my other report. And all of a sudden, we saw Bitcoin take a drop. Do I think this is the big drop? No, not yet. I mean, it took a drop, and it bounced back a little bit. What I'm more concerned about is this is how the central bankers work. They pump things up by using free money, just like the stock market, the housing market. Sometimes they let it drop a little bit and then pump it up again, because when people see this, they think, oh, okay, everything is still okay. Let me get in. And those people that were hesitant, who see it drop, and then it goes back up, they say, oh, look, it's really stable. It's going up again. I don't have to fear anything. Let me get into the market. And I think this is what we're seeing right now. And from everything that I've been studying and everything that we've been talking about, the central banks love to create bubbles. They love to do this, and they use them in all different ways to push their agenda. And I could see how they could push their agenda using cryptocurrency, where they can pump it up and then dump it, where they sell massive amount of cryptocurrencies, just like they do with the gold and silver contracts. And we also have to understand that they started the futures market, which they're going to try to use to control Bitcoin and most likely, smash it down. That would be their plan. They want to show that it's volatile. They want to show people that you shouldn't be getting into this. Now, gold and silver, this is a store of wealth. This has worked for thousands of years. It worked in this system until the central banks got laws passed, and the government in our country and across the globe, different governments, allowed central banks to take control and to start creating their currency out of thin air with interest attached to it. Cryptocurrency, I do believe, would be a fantastic currency because it is decentralized, because there is no central bank. You don't need banks. Everything is accounted for. But if the central banks push their agenda like I see they're doing right now, where they're trying to take hold of the crypto market because they finally see something where they can say, we can completely get away from cash all at once. We don't have to worry about the dollar. We know the dollar is doomed. We know the euro is not going to go anywhere. We see that cryptocurrencies, this is perfect because there was never cash in the first place, so we don't have to worry about it. And once again, if they're able to convince those in government that cryptocurrencies, and I'm just going to use the word evil, if they're evil, the ones that are out there, Bitcoin or Litecoin or Dash or any of them, and we need, and this is what they do, they make it look like these are volatile, these are unsafe, we need something that is stable. They will introduce the Fed coin, which I do believe they already have, and it's waiting in the wings. And we can see that they're moving in this direction. And this is why I'm saying be prepared and cautious with this, because we can see what has been happening lately. And what's very interesting about all of this is that Goldman Sachs, and this is something that we need to understand and recognize, because all these banking systems are arms of the central bank. They work with the central bank. They're members of the board of the central banks, and they like having the central banks. They're preparing to launch a cryptocurrency trading desk. And we understand that they're not doing this in the best interest of the people, for investments for the people. They're doing it to corner the market, control the market, and maybe usher in the Fed coin. And we can see that we're heading down this path where it looks like they might be pushing their agenda. Now, the central banks, they understand that the dollar is doomed. And they know that people are going to need something to trade with. And it'd be great if there was something that didn't involve cash. Cryptocurrencies looks like this could be it. Now, the people are going to have to fight against this because they're going to make it look like, and they're going to try to push their agenda by convincing government that cryptocurrency is awful. And of course, they're going to come out in reports telling you how many people lost money. Once they crash it, they're going to tell you how bad it was, and this is why it's unsafe. This is why you need the central banking system. This is why they need to control it. This is why they need to stabilize it. This is why we already have laws written up. All we need is government to pass them that gives the central banks the sole ownership of the cryptocurrency that will be used here in the United States and around the world on a low level. And they might use something else at a higher level. And this is what we're watching right now. And we can see that this could be a play to actually have this done. So this is why I'm saying be prepared and cautious. You could still be in the market. I mean, I wouldn't mortgage your house or take out credit cards and go into the Bitcoin market or any other cryptocurrency market. That'd be ridiculous. Being in the market is fine. This is my personal opinion. You can use the crypto markets where you can get some profits out of it. Use it maybe buy gold and silver or just take the profits. You can do that. That's fantastic. But I wouldn't go all in. Some people go, just like in the stock market, people see it going up and they go all in. And all of a sudden everything is lost and, they have nothing left. We've seen this happen in the past. You don't want to do this because you want to be diversified. You want to be prepared for anything that could happen. Now, out in Canada, we see the housing affordability hits a 27-year low. And it looks like the everyday person, they just can't afford the homes. Now, houses are starting to fall, but it's completely out of the reach of the everyday person. Now, the percent of income the median family would have to use to service debt pushes above 50% in Toronto and Vancouver. Currently, Toronto is at 71.7% and Vancouver is at 79.8%. And people, they just can't afford homes. This is a telltale sign that the housing market is in a bubble. We see here in the United States, the UMich consumer confidence, it is declined right now. People are looking at the situation saying that, we're not very confident in what is going on. And we mentioned this yesterday or the day before, where the corporate media is out there saying, wow, retail sales, they actually didn't say retail sales. They're saying spending is at an all-time high where people are using debt. And we said that savings have been declining. And if we take a closer look, we see that the U.S. consumer is completely tapped out. The Department of Commerce reported that in November, personal income rose by lower than an expected 0.3%, and U.S. consumers, their savings rate right now is continually declining. And in the latest month, it tumbled to 3.2% to 2.9%. The lowest since 2007. Which, as a reminder, is 1 month before the recession started. So when you look at this, we see since 2013, the savings rate continually declines. And we've reached the point of, like I said, where we're back to 2007, which tells you that people need to use their credit cards because they have nothing saved. And when you look at the credit cards, we see they have shot up in the beginning parts of 2017, going into 2017, and people are using more and more of their credit cards like we've never seen before. And this tells us something. This tells us that people, they just don't have the funds. We're seeing retail shut down, people being laid off. We see Subway right now is closing 909 stores in 2017. This is the beginning of a crisis. Because when we look at it, we see that, the restaurant chain was supposed to be doing fantastic. Everyone was getting hired. There's more and more waiters and waitresses. But we see huge restaurant chains shutting down. And this does not look good. And this is at an affordable price where people can go in and buy a sandwich. So already we're seeing something is wrong here. We see durable goods orders. They stumbled in November. You remove aircraft and parts and things like that. It looks like durable goods really is not doing well whatsoever. And that is like washer, dryers, the big ticket items. And we're starting to see that everything's starting to fall apart. And what's very interesting is that they're saying new home sales, well, they have exploded higher. Now, what's interesting about all of this is that wages are declining, savings are declining, credit card debt is rising, more and more people are losing their jobs now in restaurants, in retail, corporate earnings, they're dead, no revenue, no sales, tax receipts coming to the government are declining, but people are going out, and mortgage applications have been declining. They've been going absolutely nowhere. But new home sales are exploding. During the summer months, new home sales were declining, existing home sales were declining, and now everything is just popping up. Well, if you really look at this, new home sales really haven't gone anywhere. They're not even halfway to the point where they were back in 2004, 2005, 2006. So really, housing is really not going anywhere. Even though they come out with these reports telling you how great it is, it really isn't. And what we're seeing right now is that this economy has gone nowhere. It still has gone nowhere since the recovery because we've never had a recovery. What we're looking at is the illusion they created, and they're getting into trouble. And we could see that the people, they want a different currency system. The central banks want to keep control of the currency system. They want to keep control of the entire system. And the entire economic system is breaking down. The people believe the economy is doing well because the stock market's doing well. If you ask people on the street, what is the economy? Most of the people are going to tell you the stock market. If the stock market fell today, people will be sitting there going, oh my God, what just happened to the economy? And it's not like nothing has been happening, because prior to 1929, 2001, 2008, the economy, well, that was the first part where you saw things breaking down. The last thing to go is the stock market. And by that time, it's too late. You're not prepared. You're not ready. And this is what's been happening. The economy has been breaking down this whole entire time. We're at the point where the next thing to go is the stock market. And when it comes down, it's game over. That's when everything is going to hit the fan, because everyone's going to start to realize that this is all fake. This is what happened back in 2008. Everyone started to realize the subprime securities was fake. Real estate was pumped up. It was a bubble. That all these corporations, they all lied about their earnings and their revenues, and they needed all these bailouts. The banks lied about how stable they were. The whole thing was built on a house of cards, and it came tumbling down when the market came down. We're going to see the same thing. This is why you need to be ready and prepared.